All right, everybody, welcome back to our Retirement Basics series for the final video, a sample analysis of your personal retirement analysis. Folks, my name is Greg Parker. I serve as managing partner here at Engrave Wealth Partners. And our goal throughout this entire series has been to discuss with you the 5 steps necessary to think about a successful retirement. You've worked hard to prepare yourself for this one moment. But what we have found over and over again from working with folks going through the retirement process is that they commonly overlook one very simple fact, and that is simply the impact that taxes are going to have when it comes to your retirement. Thinking about the process of transferring assets into retirement savings vehicles that can provide you tax-efficient income throughout the years of retirement is absolutely critical to your retirement success. Why does this not get talked about more? Well, again, we've mentioned in prior videos that the primary means of retirement planning for traditional financial advisors is to think about the first few years of retirement where taxes are normally not a problem. What is the problem, however, is that the tax bill is going to go up on you starting at age 72, most likely because of required minimum distributions. Folks, when we think about this retirement process, it's extremely important that you know the impact those taxes are going to have on your personal situation. But more important than that, what can you do about it now, even if you're not ready to retire for another 5 or 6 years? Well, the good news is there's a lot you can do about it right now. But in order to share what that looks like with you, how about we schedule a test drive? Let's get to the point where you can actually try this on for size and make sure that you know what your specific situation is going to be and how you can truly maximize retirement enjoyment while minimizing the reach of the IRS into your retirement savings. So let's dive in and look at what a sample personal retirement analysis would look like. We happen to have one we ran for one of your colleagues here recently that is going to provide some useful comparisons so that you can understand what it means when we say that retirement is like a two-sided coin. On the one hand, we want to think about retirement by answering a simple question: can I afford to retire? We want you to know that you can walk through the retirement process and get the income that you need, providing for you and your family, not just in the early years of retirement, but on throughout the years. But there's a second question that isn't often asked, and that question is, how should I retire? What are some of the basic steps that I need to think about now so that I can help make sure the income is going to be there, but also minimize the taxes paid? Well, folks, our goal at Engrave Wealth is to make sure that when you look at that two-sided coin, you know that no matter which side lands, it's going to be heads you win, tails you don't lose. So let's start off looking at the very basic question of, can I afford to retire? And some of those questions you'll probably ask yourself of, do I have enough saved to retire? Or very specifically, how much income can I generate off of my retirement savings? Folks, using widely accepted industry planning tools, you will receive a Monte Carlo analysis showing the probability of your retirement success. Now, if you've never heard of that before, what is a Monte Carlo analysis? Folks, Monte Carlo analysis is a commonly used tool in the financial planning world that looks back at 1,000 various scenarios throughout market history. In other words, we're going to take actual market returns and we are going to change the variability of when you might have retired to show you examples of whether your scenario would have worked out accurately. In fact, when it comes to thinking about success in retirement, you need to know that there's a lot of variables at work. Whether you can afford to retire is going to depend upon things like your basic living expenses, your healthcare costs, your mortgages. What if you want to pay that off? Thinking about those taxes or inflation, or as we mentioned, RMDs. And all of those things need to be considered in light of what kind of returns can you expect on a portfolio at a given risk level, and what would the potential of other earned income mean in the overall plan. Folks, looking at Monte Carlo analysis with all of these variables is going to produce a result for you that helps you to see the probability of success given those 1,000 different scenarios based on your variables. Here's the beauty of Monte Carlo analysis. We can step in at any point and change any one or a number of the multiple variables to show you what the outcome could be if those variables change. Maybe you decide, no, I don't want any additional income in retirement from consulting or other earned sources. Instead, I'm going to live on what I've got. Maybe the basic living expenses need to be a little bit elevated in the first 10 years to account for some travels or other expenses like kids in college, but they're going to taper off later on 5 to 10 years down the road. Monte Carlo analysis allows us to step in and look at the probability of success, understanding the changes that can occur in those variables. The wonderful thing about Monte Carlo analysis is you're using actual market data to understand with the 1,000 different scenarios, in how many of those scenarios would you have had enough retirement savings to get the income you need all the way up until a given age and still have money left over at the end of life. Folks, that's the beauty of Monte Carlo analysis. And what it helps us to look at is a detailed year-by-year summary of your life, seeing the income changing from year to year because of inflation, looking at the impact of investment returns on a portfolio. But most important of all, understanding the impact that taxes are going to have on your retirement. Looking at the tax column alone helps us to see where the impact of higher taxes is going to hit you the hardest and helps us understand how much time we have to engage in some aggressive tax planning to try to minimize that burden later on. Understanding the first question, can I afford to retire, is going to give you a peace of mind to know that you can step into retirement with a certain amount of flexibility on the many variables around retirement and still be able to enjoy success. Now, the second question, how should I retire? We want to start to look a bit deeper. And honestly, I'm going to tell you that this is where our firm separates itself from most of our peers. The first question with Monte Carlo analysis can honestly be answered at nearly any financial planning firm in the country. But digging into a question like, how should I retire, is something highly customizable at Engrave Wealth. We're going to consider things like your total assets, understanding his and her 401k savings plans, the pension lump sum options you may or may not have, Roth IRAs, the impact of the growth in those Roth IRAs, any after-tax savings or other forms of income or assets coming from other types of owned assets, things like rental properties. We're going to compare those assets to the income needs that you may have. And where does that income come from? Does it need to come from your after-tax savings, or are you going to have other earned income like consulting income for both? Maybe we've got rental property income or Social Security income to consider, or those required minimum distributions at age 72. Why do we need to think about the income from different sources the way we do? Because each of them has a different impact on the tax situation. Thinking about how taxes are impacted, not just from the after-tax savings, whether you've got capital gains, losses, or dividends to account for, but it also needs to account for other forms of ordinary income you might have to take into account. Folks, looking at all of the different sources of taxes is going to help us put together a year-by-year plan from the first year of retirement until the end of life, so that you can know the immediate impact of subtle changes on tax planning, how it affects your assets, your income level, and the overall bottom line of what is yours to keep. That's the major advantage of thinking about long-term planning when it comes to retirement optimization. Once we have an idea of those three different categories, assets, income, and taxes, we can begin to think about optimization. In other words, if we know that your base case scenario is to recognize a certain amount of income in year one, what we want to ask ourselves the question is, what forms of tax planning can we engage in to try to optimize and maximize your savings while minimizing what goes to the IRS? Folks, talking about this in the form of Roth conversions or NUA is what helps us understand how to take advantage of the optimal tax bracket for your family today in the early years of taxes, so that we can take some of those taxes paid in the later years with RMDs and bring them forward into today's lower tax rates. This is extremely urgent when we think about tax planning in a sense of an environment where tax structures are guaranteed to change over the next 5 to 10 years. Remember that today's current tax laws, the Tax Cut and Jobs Act passed in 2018, has an automatic expiration of December 2025. That means that today's marginal brackets will automatically adjust back to the 2017 brackets starting in January of 2026 with an inflation adjustment. That means that timing is of the essence. Even if you're still working during these years, there are tax planning mechanisms we can use to help optimize your family's retirement success. Looking at those scenarios will help us to recognize not just the potential tax savings, but most importantly, where your assets are going to be invested in what type of account, and we can then use those opportunities to make the most opportunity for your family for long-term success. In this particular example, I shared in another webinar how this individual really took advantage of building out the Roth IRA because she wanted to provide an inheritance for her sons. That inheritance in a Roth IRA was much more tax efficient for her sons while still providing the income she needed during her life. We also shared an example of another client who wanted to maximize potential tax savings by focusing in on very high-end Roth conversions. These are examples of how we can help look at your scenario on a personal level and make sure that you have an active plan walking into retirement, but more than that, a plan that gets updated every single year in retirement to account for the changing variables of your life. Folks, the goal here is a successful retirement, one that is filled with peace and the way you want to enjoy it, not having to worry about the additional tax burdens of RMDs or changes in the tax laws. We will update this plan accordingly each and every year to make sure that your expenses are accounted for, the growth of your investments is taken into account, and any potential changes in tax policy will automatically be included. Folks, this is something that we think is important that everyone needs to consider. Answering those basic questions about retirement that you know you need to ask, and we can put them all together for you in one place, a retirement optimization plan. Folks, the personal retirement analysis provides this free of charge. It's that important, we feel, to have the data in everyone's hands that we do not charge for our time to put this together. Once we receive the basic information from you, which can be collected through our website, we can produce your retirement analysis within 1 to 2 business days and schedule a time to meet with you and your family using Zoom or in person in our office to walk through your plan step by step, providing you with the information you need after the plan to know how to successfully plan for retirement. Folks, to get started, go to our website, engravewealth.com. You can click the Start Your Free Retirement Analysis button. We'll collect some basic information that allows our team to reach out to you and schedule that time together. Don't delay. This is an important way to keep the IRS from reaching into your retirement savings. Act now and get it started, and we will look forward to working with you. That's it, folks. Thanks for tuning into our Retirement Basics series. Please check out our other webinar series on investment returns, risk, how to measure portfolio analytics, and so forth. We'll look forward to visiting with you soon.